Imagine waking up one morning, making your coffee, sitting down at your kitchen table, and realizing you don't owe anyone a single rupee for the roof over your head. No bank, no lender, no monthly payment hanging over you like a storm cloud. Just silence. Now here's the interesting part. Most people think that moment would feel like winning the lottery, like crossing a finish line, like finally exhaling after holding your breath for 30 years. And it does feel like that, but only for about a week. Because what happens after that moment, the weeks, months, and years that follow, is something almost nobody talks about. And it's not just financial, it's psychological, it's emotional, it's almost spiritual. Paying off your house doesn't just change your bank statement. It changes the way your brain works. It changes how you see risk, how you see your job, how you see time itself. And understanding why that happens might be the most important money lesson you ever learn, even if you haven't bought a house yet. Here's the story most people tell themselves about home ownership. You buy a house, you spend 20 or 30 years making payments, you pay it off eventually, and then you retire, sit on your porch, and everything is fine. It sounds clean, linear, simple. But that story skips the most fascinating part, the psychological transformation that happens the moment that mortgage disappears. See, most of us think of paying off a house purely as a math problem. You had a debt, now you don't. End of story. But money has never been just about math. If it were, every person who understood compound interest would be wealthy. Every person who knew smoking was expensive would have quit. Every person who calculated how much their daily coffee costs over 10 years would have stopped buying it. We don't make financial decisions with spreadsheets. We make them with emotions, habits, identity, and fear. And the mortgage, that giant monthly payment most families carry, is one of the most psychologically heavy financial obligations a person can have, not just because of the amount, but because of what it represents. It represents vulnerability, dependency, the feeling that something external has a claim on your life. And when that claim disappears, everything shifts. Let's break down what actually changes, step by step. The first thing that changes is your monthly cash flow, and the numbers here are staggering when you actually sit down and think about them. The average mortgage payment, depending on where you live and when you bought, can be anywhere from a significant chunk to nearly half of a household's monthly take-home income. For many families, it's the single largest expense they have. It towers over everything else. Now imagine that payment simply vanishes. Suddenly, every month, there's a river of money that has nowhere to go. It just sits there waiting for instructions. And this is where something fascinating happens psychologically. Most people expect to feel rich in that moment, but what many people report instead is something closer to confusion, even anxiety. Because for 20 or 30 years, that money had a job. It went somewhere automatically. There was no decision to make. And now, for the first time, there are decisions everywhere. Do you invest it, save it, spend it, give it away, travel, work less? The freedom itself becomes overwhelming. And this is something behavioral economists call the paradox of choice. When more options don't make us happier, they make us freeze. But here's what the smart ones do. They redirect that mortgage payment, that same amount, automatically into building wealth. They treat the mortgage payment like it still exists. They just change the address it goes to. Instead of going to the bank, it goes to an investment account, a retirement fund, an index fund, a rental property. And here's the mathematical magic of that decision. A family that pays off a home and then invests what was previously their mortgage payment for the next 15 years at even a modest return can accumulate an amount that rivals or exceeds the value of the home itself. The house was just the beginning.
Now let's talk about the second thing that changes, and this one surprises people the most. Your relationship with your job completely transforms. Think about it this way. Why do most people stay in jobs they don't love? Not because they enjoy being there, not because the work is deeply fulfilling, but because the mortgage payment is coming on the first of the month, and that check has to arrive, and that means you cannot afford to say no to your boss, cannot afford to take a risk, cannot afford to walk away. The mortgage is not just a financial obligation, it is a leash. It's the reason people stay in careers that drain them for decades. It's the reason people don't start businesses they believe in. It's the reason perfectly talented people never make the leap they know deep down they should make. Because the cost of getting it wrong is too high. The mortgage doesn't care if you had a bad year. It doesn't care if your industry collapsed. It doesn't care about your dreams. But the moment that payment disappears, something shifts in your psychology that is hard to describe unless you felt it. Suddenly, the worst-case scenario gets smaller. If you take a risk and it doesn't work out, you still have a home. Your family is still sheltered. The floor doesn't disappear. This is what researchers call psychological safety, a baseline sense of security that actually increases your willingness to take meaningful risks, and meaningful risks are where real wealth is built. People who own their homes outright start businesses at higher rates. They negotiate salaries more boldly. They change careers. They say no to things they don't serve them. They say yes to opportunities they would have dismissed before as too uncertain. The paid-off house doesn't just give you financial security, it gives you permission to be brave. Now here's the deeper idea, the one underneath all of this. Our entire culture is built around monthly payments, mortgages, car loans, credit cards, subscriptions, buy now, pay later. Everything is designed to be broken into small, manageable monthly chunks because small numbers feel less frightening than big ones. And there's a psychological reason that works so well. Our brains are not designed to feel the full weight of large numbers. We feel the pain of handing over a large sum all at once, much more than we feel the quiet drain of a monthly payment that slips away automatically. This is called payment decoupling, when the act of paying is separated from the act of consuming. The pain of paying fades, and when the pain fades, we spend more, borrow more, and stay in debt longer than we rationally should. The mortgage system is the ultimate expression of this. 30 years of payments engineered to feel manageable, while the total amount paid, including interest, often adds up to nearly double the original purchase price. And the entire financial system is designed to keep you in that loop, to keep you with a payment, to keep you obliged, to keep you dependent. Because a person with no monthly obligations is a person they cannot sell fear to. Think about that for a moment. When you have a mortgage, you need job security, you need stable income, you need insurance for everything, you need to stay in the system, play it safe, keep the check coming. But a person who owns everything they live in, they have options, real options. And options are the one thing the system doesn't want you to have too many of. This is why paying off your home is not just a financial milestone, it is a philosophical one. It is a declaration that you are no longer going to trade your future income for present comfort. There's also something that happens to the way you experience time. Before the mortgage is gone, every year has a hidden passenger. A 30-year loan means 30 years of obligation, and while you're not consciously thinking about it every day, somewhere in the background of your life, that clock is ticking. The moment it stops, time feels different. Your future, which was already partly claimed by the bank, belongs entirely to you now. And what's remarkable is how people describe this, not in terms of finances, in terms of peace, clarity, lightness. One common description is that it feels like you stopped carrying a backpack you had been there so long you forgot it was there. The weight was always present, you just got used to it, and only when it's gone do you realize how heavy it actually was. So what do you do with all of this, whether you have a mortgage or planning to buy or just starting out? The first thing is to understand that the goal is not simply to own a home. The goal is to use the home as a stepping stone towards a life with fewer obligations and more options. This means being intentional about paying it down faster if you can. Even small extra payments towards the principal, made consistently over time, can shave years off a mortgage and save enormous amounts in interest. The math on this is almost shocking when you run the numbers. The second thing is to start building the mindset now, before the mortgage is paid off, that when it is gone, that money immediately goes to work somewhere else. Not to a bigger lifestyle, not to more consumption, to wealth building.
Treat that future moment like a financial milestone you are planning for, not just waiting for. And the third thing is to recognize that the psychological shift we talked about, the freedom, the bravery, the options, doesn't only come from a paid-off mortgage. It comes from reducing obligations in general. Every debt you eliminate makes the worst-case scenario less frightening. Every obligation you remove gives you a little more permission to be bold. The mortgage is just the largest and most powerful example of this principle. Here's what it really comes down to. We spend so much of our lives building the life we want, the home, the career, the family, the security, that we sometimes forget to ask what we're building toward. Most people spend 30 years paying for a place to live, and the moment that obligation ends, they discover something unexpected, that what they were paying for was not just a house. They were paying for the right to finally live on their own terms. And the ones who understand that early, who see the paid-off home not as a finish line, but as a launching pad, those are the people who look back at 60 and realize the second half of their financial life was better than anything they imagined in the first. The house changes everything, but only if you understand what changes and why. If this made you think differently about debt, about freedom, or about what you're really working toward, share it with someone who needs to hear it. And if you want to keep exploring these ideas about money, psychology, and how wealth really works, we have a lot more where this came from.